Good afternoon, Scott Redler, T3Live. Welcome to today's recap. So some days you come in and you can't expect what's going to happen. You can only deal with it as it unfolds. And today we came in, futures are down big. The Italian spreads were through the roof. They raised the margin requirements, just adding fuel to all the European fires. So this was like a day that really denial became a bit of a reality. And I was in somewhat of a denial as well because charts have been looking great. And things have been moving right along. It's been very profitable to hold a portfolio full of stocks and riding the trend. But then, just like you get a day to take notice that we saw back in October, on October 4th, I figured today could be that next day to take notice for another direction change. So what do? You salvage the trade. What do? You get light. You get rid of some excess positions. You pull back so this way you're out of harm's way because the headlines coming out of Europe are getting more complicated and harder to deal with. And at this point, I don't know what the solution is. And I don't think the pros or the think tanks out there really know how they can handle Italy because obviously it's way too big to fail and it's too big to save. And the ECB has been putting itself on the line ever since it started giving bailouts to Ireland, Portugal, and Greece, where smart money is leaving these banks and they're getting more and more on the hook, and I just don't know which way it's going to pan out. And right now, today's chart bar, today's potent down move, puts the market back in indecision. So when you have craziness going on in the markets and you have a potent down day like you have today, you get out of the way if your risk tolerance is uncommitted. If you're holding things the longer term, you could always get out of the way if you're going to really flip gears quicker. So at this point, if you take a quick look at the spiders, I want to show you a few things. First things first, this was the day to take notice back on October 4th. This was the day that I came out and said I put a 75% chance that this was the low of the year, and we had a very, very, very healthy move. To the upside, met all targets. Then, as of yesterday, things look good. Holding a lot of positions, 8 to 10 of them, with the short also in the spiders as a hedge, because obviously we all knew that there were a lot of headlines out there. And then today, with today's sizable gap down, we were supposed to look to see if anything can go green, if any sectors could lead us out, to either sell some of the longs, cover some shorts, and get out of the way. Okay, as far as this bar right now, this is a very potent bar. This bar just engulfed the last 1, 2, 3, 4, almost 5 days worth of action. We broke below 1235, closed below it. Look what happened the last 2 times. We tried to come off, we came off the lows, we held in well today. There was none of that type of action. So the next level we'll be watching is this 1215. But for me, I wasn't sitting around. I had probably more longs than I've had on all year. It just happened to be in today. So I wanted to figure out what can I do to trade out of it, salvage a trade, step off the landmine. There are a lot of people, okay, I use this analogy all the time. You're walking through a line, like a minefield, and you step on a mine, and some of the people quick could get off it, jump, run, get out of there like hell, and lose a limb. It's the ones that stick around and say, oh, I don't know what's going on here. Maybe I could stay. Maybe someone will come save me. Maybe this isn't real. And that's how you blow up your account, or you lose more than just a limb. You lose a limb, you can fight another day. You blow up your account or you blow yourself up, you're in trouble. So today, midday, the market had a decent bounce, right? We were down 300. We were only down 200. Sent out that midday note for the blog around 11:45 saying, I am out. I'm not sure what's going to happen here. So if I have no edge, I take a move to the sideline. So, I took my losses, little lumps. All it did is really get rid of what I made yesterday. But I wasn't willing to say, I'm going to just be in harm's way, worry at night of what's happening next, and give up what's been made in the past, 2 months because we've had a hell of a move. And it's time to let the market show you what it's going to do. So again, back to the spiders, you take a look here. Here is the level that it broke. Here's the next level to watch, and we'll figure out what happens tomorrow. If you look at the 5-minute chart real quick, you will see never really an attempt, to take back the gap. So you had a quick move lower, okay, which at this point, this is where we sold most of the longs. Then you had a bit of a bounce, came back up to about 1250, a little bit of a rally attempt, but again, look at the size of this gap, still controlling it. They say if you don't fill the gap in the first hour, you typically move in the same direction of that gap. So if you didn't get out, this really was if you were still in there, here was your signal to get out right around this 12:45, and then once it broke, the morning low of about 12:39, and if you did so, you saved yourself a little bit of pain, and now the question is, where do we go from here? So this was the last part of the out. My out was in here. If you tried to stay with it, this really was your exit signal. So as far as stocks, we wrote down a lot of support levels that should be watched for cash flow. Some of them paged in the beginning. Apple held 395, gave you bounce back to 400. If you were flat, congratulations, you could have made some money there. Google went to about 602 and rallied back to 608. So there were ways to make money, were ways to trade out of a few things if you were long overnight, but then you had to really just trade out of them and take it. Apple right now, it looks very dangerous to me. This is the daily chart. This potent down day just engulfed this entire range. So this one day showed more power than all of these pre-existing days, and it closed right on the 50-day. If someone put a gun to my head tonight, I'd definitely rather be short here for a break than long, even though someone might come out and defend it and say the DigiTimes article was fake, this and that. So I went out flat, and tomorrow if we start breaking below this 394.23, we could get a juicy trade to the downside if you're an investor in Apple. I would say you can lighten up. You don't have to always sit and hold your nose and go underwater, because what could happen is, if I put it's not coming on. Here you go, your basic studies. You put the moving average in. The 200-day moving average is about, let me see how many points lower, but it's pretty significantly lower, 262. So you could save yourself a good 30 points if that's the case, if that's what happens here, if the market really starts to fall apart. So just this box has been maneuvered for a while. This island top is still controlling the direction, and at this particular point, it's leaning a lot more down than up. Google, take a quick look here. That's not Google, that's PPG. Here you go, Google. Not too crazy, right? It tried to bounce off here, wound up giving it at the end of the day. Most of us are out of Google because we did play it as a momentum trade, and at this particular point, momentum just left. We're back coming into the base. I guess we'll see how we handle this level just for a trade or a bounce back. If you're an investor, just continue to stay the course. For a short-term trader, time to get a little bit out. As far as some groups and sectors, OAHs were strong early on before giving back. This too, not game over, but this just engulfed this mini uptrend here. So if that's the case, that could have control of the direction. So you could see it move down to 121-ish. So you're better off getting out of some things and perhaps looking here to see what the story is. Day to take notice, what this day means, I'm not sure, but a day to get out, a day to get sort of flexible here. As far as the XLF, wow, big wide range bar. This just engulfed this entire area. So to me, that's run for the hills. I got out of my Bank of America, I got out of my JP Morgan, and this could lead to at least a move to the moving average, if not lower. Same way this was a powerful reversal bar here. This just gave you one of those direction changes there, or at least tighten up here. This is tough. So to me, I'm always selling into something like that. And plus, we talked about Goldman Sachs. The line in the sand. What was the line in the sand? Think to your head. What did Red Dog say? Oh, 102, 103. That was actually an area guys made money short, because look at Goldman Sachs. It now broke this uptrend that I was drawing. Look at this uptrend. Uptrend, up, all the way up. Pow. Just broke it to the downside. If you were long Goldman Sachs, this was your way out. This is why I get really pissed off when an influential analyst upgrades Goldman Sachs to 115 after some calculated moves from here and from here. And now it just resolved this inside range to the downside. So we'll see how it fares from here. Irresponsibility, that's not something that the dog likes. But right here, this was your invitation out. As far as, let's see what IBM did. IBM, look at that. IBM broke this rising uptrend for the first time. So what does that tell you? That tells you you should notice that. Maybe get out of a little bit of it. It didn't hold it and go positive. It stayed there and then broke to the downside into a different support. So now for momentum now to me is out of this IBM, and it could be a buyback, but not from right there. It could be this 177. This is a trend that has not broken since September, just closed below. So we'll see how it handles it. If it can't get back above this line pretty soon, you're going to see it move to 177, and who knows, maybe even below. So that was an exit signal. When stocks break certain patterns, you have to just respect it. Okay, Lulu tried to be strong early on, so let's see what that did into the end of the day. Not crazy, but this breakout day was just met by a much stronger bar. If you look at this wedge, it just put a bit of a powerful bar in this scenario. So you could see 52. So if you're not committed to Lulu, you might as well get out of the way and see how it handles 52 or even this 49.36. So I'm seeing a lot of patterns here that cause caution or should give you a red flag to say, okay, if I've been driving the bullish cart since October 4th or added on October 8th or been following these retracement rules the entire time, today was a day that the rules of the game somewhat changed. And when the rules change, you step back and figure out what those new rules are that you have to play by. And the best way to do that is by having less risk on, so you're unemotional and you're thinking clearly. So if we go back to the SPX, let me just real quickly put in some retracement rules here, right? We'll go back to our retracement rules. This was the low. This was the high, right there. We held the 0.38 this time. We now broke this minor area. So this is a spot to watch. And then really this 1184 to 1195 is the next key area. But I'm a little skeptical, guys. I'm sorry. Today, I haven't seen a bar like this in a long time. You didn't see that once during this entire move. Granted, these two bars were pretty powerful, but that was after an enormous move. Now you're talking, this inside range where people are not sure which way we go, if this rally was too long in the tooth or if we need to correct. So this bar right here said that more people are leaning to the downside by the size of this engulfment than to the upside. So just take notice of that. The charts have been telling a different story to the headlines. Today the charts matched up somewhat. And granted, tomorrow we could be up 100 points. Big deal. We'll figure it out as far as in the Dow. But I'm not planning for that, and I won't even care because we can make money both ways. So if the market proves that today meant nothing, so be it. But if it does mean something and it changes the direction short term, at least you're being prudent and you're getting out of the way and you're going to be able to manage yourself moving forward in a way that you could have strategy and you could have clear thinking. And that's what we're here to help you to do. So at this point, hopefully most of you guys manage your positions into my 1130 note. The Dow is only down 200 and a quarter. So maybe you saved yourself about 20 handles worth of pain and 175 points worth of Dow points and another 25 on the Nas. And thinking that you did at least the right thing. You maneuvered your trade, you salvaged it, you took your loss like a man or a woman or whatever you call yourself, market participant. And now you're in a position where maybe we accumulate some positions back into lower areas. Maybe we see some relative strength, but you'll be in a position to think clearly and manage it versus be in the way of the market or controlled by the market. Because we all know when you're controlled by the market, you're never making rash, right decisions. So at this point, let's just think clearly and embrace the volatility, because when volatility hits, that's when we tend to make the most money, because we know how to think clearly, use strategies in order to be safe and make some money. It's been Scott Redler, T3 Live. The recap, see you tomorrow morning at the call. Have a good night.